Welcome back to Market Day Report. I'm Chris Swift. We've seen the markets trade back, forth, up, down, left, and right, and let's see what they're doing now. So the corn market this morning had been a little bit softer and still is, but it's just not terrible. It's just not great, but it's not terrible. December down a penny, 4.79 even. March down 1 1/4, 4.93 1/4. May down 1 1/2, 5.01 1/2. Out to July down 1 1/2, 5.07 1/4. Soybean markets this morning are a little bit softer still, down 5 3/4 on the Novies, 12.82 1/2. Jan down 6, 13.02 1/2, and the July contract down 5 1/4, 13.36 1/2. Out to our Chicago wheat that have been the shining light this morning of higher trading and still is. December up 8 at 5.76 1/2. March now up 6 3/4 at 6.03 even. And the new crop July contract up 5 1/4 at 6.34 1/4. Kansas City hard red winter wheat, it is up 4 1/4 on the December at 6.53 1/4. March up 3 3/4 at 6.63 1/4. And July up 3 1/2, 6.74 3/4. And into our spring wheat. Spring wheat up a nickel on the December, 7.25 3/4. March up 4 1/2, and July up 2 3/4, 7.66 3/4. My guest is Tommy Grisafi coming in this morning. And Tommy, we talked a little bit earlier with the soybean market. We've got first notice day. This is, I think, first notice day on the beans. Tell us what you're seeing out there in it.
Well, there's a lot of price action. I have to tell you, I was a little shocked when beans were up 9. I wasn't shocked they were up 9, but when they went from up 9 to down 9, that caught my attention. It caught people's attentions. I talked to our friend PJ, PJ, the options broker over at RJO. Mm-hmm. He gave me the breakdown of the strikes. A couple things pointing out. Number one, the stock market's having a bad day after having a bad day yesterday. And although it seems far away with beans trading column 1282, 1284, that 1260 strike, so when we deal with puts and calls, we have strikes. That 1260 strike has about 10,000 contracts open interest coming into today. Now, we're 20 cents away from it, but you're old enough to know better. Beans can move 20 cents pretty fast. They already did it once today. And every 200 futures equals 1 million bushels. So we're talking about big, big numbers. Expect a little volatility in the bean market coming in the weekend. Of course, I've told clients, if you're selling beans off the combine, we want to find a way to own them back. And you and I know there's several ways to do that. But this is where we are. These are volatile markets. 1 week ago today, I had to go for a ride, and I couldn't have my phone on. And I shut off my phone. It was up 9. And then in corn, and then when I looked, the market closed, it was up 15. So 1 week ago today, the world was acting like we were running out of corn. We traded 509. What a difference a week makes, Mr. Swift. And that's why we have to stay disciplined. We have to sell rallies. We want to buy dips. We want to sell rips. Back to you, my friend.
Absolutely. Tommy, I appreciate you saying that. And, you mentioned PJ Quaid in there, and it's interesting. I had made a comment one time to a very good friend of mine that, all the brokers and analysts tend to work together very well, even though we're in somewhat competition with one another. And he reminded me, he said, we're all in against the market. So we have a common enemy, and that is the market. And we all try to beat that market out every single time that we can. So I appreciate that. Tommy, let me ask you one other thing, since we're talking about the bean market there. Look at November of 24. We're starting to trade in a real sideways market there. The top on July the 24th or 5th, and then that bottom the 1st of August. You think we're going to stay in that range until we kind of see something, or is there an idea to break out of it?
That's a great question. We're going to have a battle for acres. I'm really excited about Acre Battle 2024. With all these crushing plants coming on and our ability to plant beans in so many new areas, especially North Dakota. So I'm sitting in North Dakota. We just had that new crushing plant come online. My clients are looking at beans for next year. They just had a big corn year, big corn yields, but don't tell the market that. They don't want to know that, right? But I know that because I'm sitting 100 yards from one of the biggest elevators in North Dakota right now. I can see the pile of corn out there. To answer your question, Nov 24 beans versus D's 24 corn. This is called a pencil, and this is like we need to take a pencil to it. We need to help our clients talk about choices they have. They're already getting ready to prepay for seed, and that's a major commitment to plant 2024. Great question. Glad you challenged me on that.
Absolutely, Tommy. Will you stay with me? We're going to talk cattle in just a few minutes with Tommy Grisafi. Stay with us. Welcome back to Market Day Report. We've seen the cattle market trade up and down and sideways just like the grain markets, and I don't see a great deal of change from what we had last 15 minutes. October up 87 at 182 even. That is on the high of the day. December up 52 at 179.95, just a little bit off the high. Feb up down 12, 181.37, and April down 2 at 183.80. Let's see what the feeder cattle market have been doing. It's been a little bit mixed today and a little bit softer now. October up 22, 240.20. Not much going to happen there with it expiring today. November down 87, 237.17. Jan down 60, 235.95. April down 87, 242.70. In our livestock market, lean hogs up 52 on the December contract, 68.02. Feb up 82 at 71.52, and June up 45 at 91.20. I want to invite my guest Tommy Grisafi back on again. And Tommy, I've heard you mention, and I've mentioned it before, the cost that it takes to produce a pound of beef, and it is astronomical right now with the price of the feeder cattle. And now that we've seen a break in the fat cattle market, the projected losses are phenomenal for cattle feeders. What can they do?
Well, hopefully they can listen to you and I on the Ag Bull podcast. You're going to explain that to us, because I know it takes more than 2 or 3 minutes to talk about it. You opened my eyes to something. I'd never compliment Scotty like this, but I have to do it with you. You did a podcast with Chip Flory a few months ago, and you just broke it down and you talked simply. Matter of fact, you're talking so much you ran out of time, and Chip gave you time. But I think someone with your knowledge and expertise needs a half hour, 45 minutes to explain the history of the cattle market and where we are now, because this is very complex. And I know our ranchers are so busy raising healthy animals that sometimes they forget to take the pencil to it. Now, we knew when the market was going up every day, it could go down. Oftentimes they do. In commodity markets, we spend more time at miserable prices than we do at good prices. I guess I would just pose back a question to you. With this new government insurance that we could do in cattle and our ability to use futures and options, why do people not hedge at massive profitability? I'll pose you that question. You are the cattle expert. Thank you, sir.
I'll tell you, Tommy, my personal opinion only is that nobody can live with hindsight. They just cannot live with their decisions that they make if they make it early. And that's the one thing that when we try to be proactive in our marketings there, we have a difficult time living with the decisions that we make, because once hindsight is 2020, I'll go, well, I could have done this and I could have done that. And I think, unfortunately, we all are under that same impression. So, Tommy, certainly do appreciate you being on the show with us this afternoon. Tommy Grisafi, he is in Fargo, North Dakota. And Suzanne, I'm going to let you have it now.
Thank you. And I love that. Tommy's right. You do such a great job in breaking it all down.
Well, I appreciate that.
So much information. Thank you so much, Chris.
Absolutely.